Joyce, we know well what the market's done in terms of its rebound. What's the JP Morgan House view in terms of what the economy is likely to do around the world for the rest of this year?
Well, we're in the easy part of the recovery right now. When you have eye-popping numbers down and no activity, some activity is going to look pretty good for the next 1 or 2 months. But the real question is this going to translate into hiring? So I think you're going to have a summer where the numbers continue to look pretty good on the macro front. I think there are going to be more questions, though, in the fourth quarter of the year. When you look at the hiring trends, when some of these programs start to roll off and hit some of the deadlines, and what we really need to see is whether the hiring comes through. Now, we still have the U.S. economy about 5 percentage points below where it was pre-pandemic at the end of the year. But this is the easy part of the recovery right now.
Lindsay Bell, how much exposure should you have to these big cap tech names that just continue to carry us higher here?
Yeah, I mean, I think that also depends on what your risk tolerance is and what your age and your time frame are. But I think a good starting point is if you look at an index like the S&P 500 right now, though, 27% of the S&P 500 is part of the information technology sector. So that might seem like a high number, depending on what your timeline and time horizon is. But I do think that exposure to this sector is important because it has become, in a way, somewhat defensive in this environment, because the acceleration of use of technology that has occurred over the course of the pandemic has really supported the growth prospects for a lot of these companies. So I think it's definitely a sector that you probably want to have exposure to.
Joyce, what's your view as to the likelihood of a huge spike, a huge wave of bankruptcies in the U.S.?
Well, I think that you're still going to see this play out over time. We've seen a default rate that has already risen to 6% in the high yield market, and we see this going up to 8% by the end of the year. So that's at a 10-year high. But I do think there's more stimulus that's going to be coming online. We're penciling in another $1 trillion. So it may take some time for this to play out. A couple of the near-term risks, though, that we are looking at is month-end rebalancing. We think that is one thing to watch, and also the U.S.-China tensions. But I think that the bankruptcy may still take some time before you see that come up as an issue more immediately.
Wanted to bring up two things that some of the more skeptical investors are watching, Mike, which is gold, which has really started to break out here, had another strong day, and treasuries. And yes, we're seeing higher yields, which you would expect to see with higher stocks, but barely. I mean, you're not exactly getting the kind of exuberance and enthusiasm for a recovery that you see in the stock market. How do you interpret all that?
No, I mean, gold certainly benefiting from the perception of just sort of wide open central bank action. Also, just negative real interest rates is something that usually provides a backstop. Also, just absolutely massive retail ETF inflows into gold funds. You could take that one of two ways. Either, it's an endorsement of the asset class, or it means as if there's been a little too much of a short-term rush into it. And Treasury yields, they've obviously been stubborn. I don't know that you should expect them to go up tick for tick with the stock market. They're not making new lows, but it definitely is not something where it seems as if this reflationary story that's getting into other asset classes is really moving bonds. But, that anchor at zero on the short end for as long as the eye can see is doing its job in terms of keeping the rest of the Treasury yields pretty anchored.
Lindsay, to the flip side, I guess we could point to the weakness in the dollar. It was acting as a safe haven when markets were scared early in the year. Do you take some positivity out of that? The dollar soft again today?
Yeah, I mean, I think it's, over the course of the past quarter, since we're coming up on the end of it here, you saw the dollar, the DXY, at least decline by about 2.5%. And that should bode well, be maybe a silver lining in some of the earnings numbers that we get out with the release of Q2 in mid-July. Yeah, I mean, it's a little bit of a silver lining. It certainly helps the emerging markets, right? So it can be viewed as a positive, especially for our S&P 500 companies that have overseas exposure. But I think that earnings season in the middle of July is going to be an important one. And maybe investors are going to be willing to be able to look past it. But earnings estimates have finally stabilized for 2020 and 2021. And it's going to be interesting to see if we see those numbers come down by another leg after these companies report earnings, because it's unlikely that you're going to see a slew of companies want to reinstate earnings guidance after the second quarter is over.
You know, another thing that happened today, Joyce, was Dr. Fauci continued to express optimism surrounding the prospects for a vaccine against COVID-19. How much do you think this is all driven by bets that is going to happen?
I still think that a vaccine that will have widespread human usage is, quite a ways away. I mean, we still think that could be something that takes months. I mean, maybe even more than a year. But what you are seeing is that we're not seeing the fatality rates that we had seen even where you've had a very stubborn first wave or fears about a second wave. And it's also been more concentrated in certain parts of the U.S. But I think for a widespread vaccine, I mean, look, the real, I think, test will be also when the school year starts. I mean, are you able to get people back into school? I think you've got a period over the summer that even if you have an increase in some of the affections, everybody's looking at this and saying it's still not as bad as what we saw, at the peak in March. And we still have certain parts of the country that are coming down. But the vaccine, I still think, will take some time. We're in stage 3 developments on a couple of vaccines, but the hyperimmunity is one issue before they have to really address that before you can see widespread usage.